The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Hope is a renewable option. If you run out of it at the end of the day, you get to start over again in the morning. Market-wise, let's take a look at it out here. We have the Dow Industrials up 97, NASDAQ up 32, S&P's up 11, gold contract down $8.50, traded at $1,229 an ounce. Silver up a penny at $15.25 an ounce. Copper, where is she? Copper's down 2 pennies at $2.19 a pound. Light sweet crude up 8 cents at $38.36 a barrel. Bonds, we have the 10-year note flat at 130, 30-year bond off a full point. 2 ticks, 163.14. King dollar down 346 ticks, 94.80. The euro is up 39, trading at 113, and the yen is at 112.47. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? So if we go over to the let's do the SPY first. We go to the SPY. What do we have in the SPY? In the SPY right now, we are up $1.27. You're doing 63 million shares. Bottom line is that we're getting over the swing point. But yesterday you got to 205.25. Well, the swing point is 205.23. Bottom line is that you had the vol. Well, let's see. We had 92 million, so we didn't have the volume. So the SPY does not have the volume for another smaller ABC structure on the way up. So the large one, well, here, we're still at a 211 SPY with the one that is generated out there from the 24th of February. If you go into the SPX, this is where it's going to get really interesting because we may get the volume inside the NYSE. We'll know at the end of the day out here. So the volume characteristic that we'll be looking at is from the 22nd of March. So the 22nd of March, folks, we did 840 million shares. You do over 840 million shares, that's going to give you the ABC structure, confirmed ABC structure in the cash S&P. Right now we're trading at 2066. We do have one confirmed ABC structure that started on February 24th. That gives you a price target of 2087. If we get volume over the number I just gave, well, guess what? That would put it into 2109. What we do have inside the NDX 100 is that already is a confirmed ABC structure on the way up. The Qs are trading at 109.59. That price structure is 111.59. That blew away the B point yesterday, blew away with volume. As did the small caps. The IWM's trading at 110. That blew it away with volume. That price projection is 114.83. Gold contract. What do we have with gold? Gold pushed into highs today. One second. Gold pushed into highs today. Had the volume behind the move. We're down $8 right now. We got to a high out here today of 1246. You did 168,000 contracts. So what you're doing is you're pushing it to higher end of this consolidation. What I expect you're going to see, yesterday we did 199,000 contracts. Today we're going to run in probably about 174, 175. That is pushing higher with good volume. And what you're going to probably end up seeing is that we're going to push right to the very end of this week with volume going up into Friday. So it's going to be wild watching this whole thing shake out. Notes, we go to the 10-year note first. What you have with the 10-year note, 10-year note out here, flat out here today. You've had a price spread from 130.03 to 129.22. Not enough volume for higher price. We've done 992,000 contracts. That's coming into 1.6 million contracts on the way down. So what you do have inside this 10-year note is that it's still in an ABC structure in the way down. This broke down on the, well, actually, hold it. It would have to come back a little bit lower. Yeah. Well, it's still a complex ABC, but we'd have to get back down to 129.12. We're coming into where we did 101.5 million contracts. So you can see you're bouncing with lighter volume. The 30-year has already given it up. The 30-year gave back everything from yesterday. It's been as low as 162.23 today. Right now it's 163.27. Good old King Dollar. Let's go over to King Dollar. So King Dollar is going to be the next ABC culprit out here. Now, this baby is doing an ABC down, so check it out. It's down 306 ticks today. You've already broken the swing point, you know, and it's held the price. The swing point of this dollar index is $94.60. We hit $94.56 today. We've already done 26,000 contracts. It only had to do 20,000. That ABC that we're talking about right here has a price projection of under 92.50. Your A point on this is March 2nd, which was $98.50. Your B point is $94.60, so you get $4. $4.10 to be exact. Your C point is $96.42, which sets up a $92.32. The August 24th swing low, folks, is 92.50. That's where this baby's going. It's a high volume swing low. That was, if I pull this up, we'll put a continuous contract on so you can see how this is hanging out here. And this is going to be wild watching this whole thing shake out. 92.52 is the exact number down there. And the reason is that as we get down to that level, we've been in a consolidation in the dollar. You know, people keep yapping that it's been a strong dollar. Well, the dollar's been in the exact same place since January of 2015. So you're dealing with something that's been in the same place, for what, 15 months now, almost 16 months. If we break, so depending on how we come down to this 92.50, because it's held really well, a few times, 1, 2, like 3 times in the last 16 months. That baby doesn't hold down there. This thing will go down to about 85. Well, for the next stop will be 89 in a heartbeat, and then 85. There's not much holding this up if, in fact, you break that area. So it's going to be wild watching this whole thing shake out. As soon as we come back, we'll go through the oil market. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials right now up 106. Nasdaq's up 33. S&Ps are up 12. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 103. You get the Nasdaq up 32. S&Ps are up 11.5. Let's go over to that oil contract. You had some nice volatility inside oil today. Oil numbers came out. Bottom line is that oil up, down, and all around. So intraday, this is what we had out here. At the beginning of the market out here this morning, 8 o'clock, oil's trading at $38.83. Starts moving higher. Numbers come out at 10:30. Oil spikes up to the 39.85s. You know, so we went up about $1. Yeah, just about $1. $1.10 to be exact. Then what does it do? Then gives it up in spades. It goes from the high up there of 39.69. It goes down to 38.14 and starts making its way back. Okay, so that's on an intraday basis. Now let's take a look at it, because the bottom line is if this market is going to finish this ABC off on the way up, you can expect that oil better stay, that it wants higher price, not lower price. So when we take a look at this on a daily basis, what you have is this. Yesterday, you got to $39.48, and we did 488,000 contracts. Today, you got to $39.85, and you did 515,000. Now, that's the easy part of the equation. The harder part of the equation goes like this. The spread is from the highs of yesterday to almost the lows of yesterday. So it's like, okay, man, are you pushing higher with volume, or are you pushing into the lows of yesterday with volume? And it's unusual when it's a toss-up like this, but guess what? That's what you have with oil right now. So that question will be answered tomorrow morning. That being said, when I go over to the dollar and look at the dollar, bottom line, dollar wants lower price. And, you know, that lower price, inside the dollar, you had the expansion of volume, you had the expansion of downtown price. That's telling me that, well, I just brought this up, intraday, we also, that low that was established out here today at $94.56 does have volume. So your probability is that the dollar will continue to lower price, which sets up higher priced oil, higher priced commodities, higher priced markets. If we go take a look at this commodity market right now, this is what you have. Wheat is down 2.6%. Hogs are off 1.6. You get cattle down 1.9. Gasoline's down 0.8. Silver is up 0.8. Crude's up 0.2. Natural gas is up 0.5. Natural gas numbers come out tomorrow, so that's going to be rocking and rolling, no doubt. And orange juice is the mover out here today. That's up 3.7%. If we go over and we just take a look at, it's because there's no doubt this is the beginning of window dressing today. Let me see. I'll make sure of this. I believe it is. We're 2 days away from the first, right? So if we just take a look at this calendar first. Yeah, so this is the beginning of, let's say no. Yeah, it is. Today's the 30th, right? Yes. So today will be the beginning of window dressing. Window dressing will go from today until Monday, including Monday, because the first is, and so what that's all about, folks, is this. Window dressing specifically, the first couple days before the end of the month, that's where large funds are positioning themselves where they have winners and they have losers. So what they're dressing up is that they're dressing up their portfolio. Let's picture that something has moved in the last quarter and it's moved up. What they want to do when these portfolios, can be seen by the public, I can see them every day. Any portfolio on Bloomberg, you can basically see them. The public can't unless you have a Bloomberg. So what ends up happening is that when they push this out to their clients, they say, okay, we want to own this. So they dress up the portfolio and say, okay, now we got all these winners in it, right? So that's the first part. That happens today. That happens as we come into tomorrow. What happens on Friday is that all the amounts of money that go into 401ks automatically come into the marketplace. Now, as they automatically come into the marketplace, it gets put to work. Why? Because what ends up happening is that funds do not get paid on cash, and that's the big deal out here. Okay, you can, when you're managing all these funds, all these mutual funds, if you have it in cash, guess what? They're not getting paid on cash. So guess what? They put it to work. So that's where that's a natural buyer in a market to continually go to higher price. So we'll see where the rest of this shakes out. But what I do expect you're going to see is that this thing's going to run right into probably next Monday, and then we'll see how these ABC structures get finished off. If we go over to the oil market and we take a look at it, look who we got. It's a beautiful thing, man. Hey, so let's go first over our man, Mr. Darrell Martin. And don't forget, folks, every Monday, every Friday, we do a Nadex great program, 10 o'clock in the morning. 10 o'clock? 10 to 11? Yeah, it's a beautiful thing. 10 to 11. I'm on every day to 10 to 11 with our man, Mr. Darrell Martin. And if you haven't test drove the Nadex platform, folks, great time to do it. Come over to our website at TFNN. You'll see the banner on the top or the side. You can hit the banner, bring it up. They'll put $25,000 of paper money into your account. You can just listen to us at 10 o'clock in the morning. I'm trading it every day at 10 o'clock in the morning anyway. So we do special shows on Monday and Friday, though. Darrell Martin, what's going on?
Hey, man, how are you doing?
I'm doing great, man. Yourself?
I'm doing fantastic.
That's a beautiful thing.
So we've had some nice trends, little, flat days at the end, but some nice trends going on, and Yellen keeping things alive, of course.
Whoa, Yellen's really keeping things alive, man. It's pretty amazing for an aspect, folks. She's talking to the New York Economics Club, but there was more movement there, or just as much movement as a Fed meeting. No doubt.
Yellen be yelling. So yeah, she got some good trades off with her today. So
there's no doubt. We had that price spread, and the price spread, folks, at 12.20 yesterday was huge in the marketplace. There's no doubt. And Darrell specializes in the Nadex platform, and if you haven't tried it, try it. I mean, it's amazing. There's no two ways about it. And if you trade in the futures market and you trade gold or you trade oil, it's a must that you do it, because there's no reason ever again to put up the type of margins in both of those commodities, because the volatility is amazing. And you'll in the gold market, you're going to give up $1.50, $2. In the oil, you're going to give up about 20 cents, and it's nothing. Do you know what I mean? It just is not a lot when you look at the risks that you're taking. I love trading the NDX like 100 like you do too, Darrell. But those two commodities, man, blow my mind, man. Do you know what I mean?
Nice bid offers, so as well.
I'm sorry?
Especially for an option. And gold has a really nice bid offer on an option as well. On the options, the bid offer is really tight.
It is. There's no doubt. There's no doubt. You know, so what do you think? What do you think of the market? What have you been trading lately?
I've been trading NASDAQ and golden oil, and been playing with some FX pairs with all this Yellen
would make sense.
Stuff going on.
Right.
So,
right.
DX obviously is one of my favorite things to trade, but can't trade that one on NASDAQ. So on that one, I'm trading like euro dollar or dollar yen.
Okay.
So there's been some really good activity on the yen pairs lately. So.
And now trading so this is really cool, folks, because I know most of the listeners you're working. There's no doubt. Here, can you just stay with us for a second?
You got it.
Awesome. Daryl and I are going to be coming right back, folks, and we're going to be talking about the trading the currencies in the NADEX platform, because I suspect, I know, bottom line is that when you're getting off work, that's going to be a great time that you can trade those markets. This is Tom O'Brien. This is Daryl Martin. You stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now up 112, NASDAQ up 34, S&Ps are up 12. We're talking about, Mr. Daryl Martin, we're talking about the NADEX platform. If you haven't test drove it yet, folks, great time to do it. Just come over to our website at TFNN, hit the banner. You bring up the platform, they'll put $25,000 of paper money into your account, and you can see how these contracts trade. So the currencies, and I got to get my head wrapped around trading these in the afternoon. Well, no, not that I have to trade 24 hours a day, but...
You wish.
Oh, man. So when is the best time that you, like, if you're trading the yen, you're probably trading at, what, at 8 o'clock at night or something?
I'll trade it during the day. There's plenty of activity.
Okay.
So. Yeah, I don't like trading at night too much. I mean, I do, but I can't.
Okay.
So usually out riding. So,
Right. And so would that be all the pairs, or the euro is different?
You can trade all the pairs. Well, they got euro dollar. They have euro yen. They have Aussie dollar, Aussie yen, pound dollar, pound yen, euro pound. So they have obviously dollar yen itself, dollar CAD, dollar franc. So they have quite a variety of FX pairs for you to trade. And I mean, there's just anytime a government news announcement is made, it impacts the dollar. And since all FX is like one big spider web,
right?
They all intersect, so it impacts all of them.
And
later in the afternoon, it'll be pretty flat. But in the morning, when the Europe is, still alive and going, and the U.S. kicks off, you can usually get some pretty nice moves.
That was my point. Yeah. Okay. Cool. So that's good to know, man. Because the bottom line is that you can wake up a little bit early, wake up at 6 o'clock, while you can start trading 6:30, and you can be done by 10. Right. Okay. Cool.
Exactly. Yeah. 100%.
Right. Because that would make sense. That's where the volatility would come in, and there's no doubt that. The volatility in the currencies, man. The currencies are moving the markets now, man. It's pretty intense.
Yeah, so it's really something that's wise just to watch, even if you're not trading currency, because you can see the correlations.
Yes. Yeah, there's no doubt about that. Absolutely huge. So we're coming into the end of the month. I mean, we haven't been on for a while. I've been a bull now for like almost a month.
What?
Yeah, I know. Miracle,
That's no.
I have. It's pretty sick. I know, man.
Wow, you're like always the bear.
Well, what's going on is that we have a family reunion up in South Boston this weekend, and all my cousins have been holding my bear suit. They got it all strung up down Castle Island in South Boston. So I'm gonna be going down there and getting it out of the freezer.
All right, well, it's time. You got to get it going, man. Disappoint all your bear fans.
I'm telling you, man, it's pretty sick.
But it's got to be coming out pretty soon. I mean, with everything going. So
yeah, listen, the size of this consolidation, folks, is pretty amazing. Okay, so and this is where the opportunities come in. Whether you're a bull or a bear. When you take a look at the consolidation we're in, this consolidation started all the way back in like September of 2014. And it's a monster. When you look at the S&Ps, it's 2126 at the high and 1820 at the low. You're talking about 300-point consolidation, man. That's freaking huge.
Wow.
I know. Isn't that crazy?
So when we bust out, yeah.
Yeah, or bust down. But no, that's right. Listen, no, what you just said, folks, this is what would really get crazy. Here, let me pull this back more. If, in fact, we did bust out, this would be intense, man, because this would be let me put this back here. Yeah, this would be insanity. Well, it wouldn't be the definition of an ABC up because the volume was down, but if it actually did break these highs and had volume, man, my God, it'd be hard to figure out. The A point on this would be 1340. The B would be 2134. That'd be mind-blowing, man.
Wow.
I know. The strict definition.
That's so funny.
It is.
Yeah.
That's intense. The strict definition, however, of an ABC is that you'd have to go up on volume, down on lighter volume, and we didn't do that. Each and every, when we came down on October of 2014, we came down on volume, we went up on lighter volume again. When we came down in August, we came down with monster volume. We came down in, January, came down with monster volume. So, that it wouldn't be the strict definition. Now, that being said, it doesn't mean to kind of break topside and do an ABC structure outside of a ABC time in the trade structure. Do you know what I'm saying? And what that means, folks, is that A to B equals C to D. That's it. Doesn't have to take them out with volume and all that. But it's pretty wild, man. Because when you think about the type of consolidation we've had, I mean, that's a long consolidation. It's going to bust one way or the other. My take is that we're going to bust downtown, but guess what? We'll find out, won't we?
Yeah. Wow. I hope it busts down so it goes faster.
Well, what does happen, folks, no doubt in the correlation of how you come down, you can see it that when you come down, man, you come down fast and furious. There's no doubt. Yeah. What's going to be intriguing here, Darryl, is that as we're going up, this has been another straight line move on the way up. So I think the market's getting tired. So we'll see. Well, listen. We look forward to the show Friday morning. I know you're going to be out here growling and prowling with us.
I got it.
10 o'clock, folks, okay? So stay tuned, of course, every day. 10 o'clock, though, you can have a great show. And I believe is it option expiration, too? I think it is, man. So you're going to have even more options, more action. Is it the... That's going to be weird if that's the third... No, it's not. No, right?
That's not a quadruple.
No. It was last week.
The first.
Yeah. No, it's going to be...
last Friday.
Yeah, exactly. Okay, brother. Well, listen, man, you have a great one, a safe one, and, of course, we look forward to show on Friday.
All right, man. You have a good one. Okay,
thanks. As we come into this close, let's see. What do we have? We have... oh, that's not bad. 10:30... Well, 10:36. 15:36, so 3:36. Volume-wise out here, what we have, let's see. You're at 583 on the NYSE, and on the NASDAQ, we are at 1.4. So I suspect what you're going to have is this. The NASDAQ already has the volume. The NASDAQ, in fact, the NASDAQ also is an ABC structure on the way up, folks. The NASDAQ took its B point out yesterday. That B point was 48.35. So that ABC structure on the NASDAQ has a price projection of 49.62. And right now you're at 48.78. So that's, you're talking about another 84, 85 points up. Now, where that also lays out, which is pretty cool, is that it lays out filling the gap from the downdraft of December. That's right where that number would come into. So how we get into that number is going to be important, because what I expect you're going to see is this. As we get up to those numbers, this market's going to die on the vine. I mean, it's a very light counter-trend bounce as it is, meaning on the way we went down versus the way we went up. That being said, what we have done is we've done two separate ABC structures on the way up, which is very positive, by the way. And then what you've also done is that you've done a 100% move of a move. So the market itself has got enough deviance in it, I suspect, to get up and probably spike the highs. And a spike of the highs can get very exciting for both bulls and bears, because a spike of a high, specifically my definition of a spike of a high is this, is that you get not only the higher price, and the higher price that we're talking about here, the highs of May go back to, I think, 2134. And when that happens, when you spike that, yeah, it's 2134. When you spike that, what would end up happening is that you would spike it by about 20 points intraday, and then all of a sudden it falls apart, sucks everyone in, blows all the shots out, then blows apart. Oh, yeah. Stay right there, folks. Come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. 877-927-6648. Dow right now is up 93, Nasdaq up 28, S&Ps are up 12. If we go over to the XLE, we take a look at some of these oil and gas equities. XLE is holding price out here today, where the price of oil didn't. You're up 13 cents. You're doing 14 million shares. You have a high volume swing out here at $64.27. That's saying, guess what? That wants to move up into that level. And then what has been hanging out here for quite some time is the November 3rd swing high. That November 3rd swing high in the XLE is $71.93. And more than likely, somehow, some way, that wants to get up there. If we go to ExxonMobil, you're going to take a look at ExxonMobil's right next to that level. ExxonMobil's up, well, it's at $84.29. And the high of November 3rd is 87.43, and the low's 85.58. So you're right, it's hanging right next to it. That looks to me like it's going to get up into it. Chevron's already there. Chevron is trading at 95.38, and the low of that number is of November 3rd is 95.42. We've hit 96 out here today, and the high is 98.64. Now, what's going to be cool about Chevron is this. So Chevron got to 96.69 today, backed off somewhat. Volume still's not bad, though. That's going to give us a clue, is that, number one, is Chevron going to get up and over this level? Because in order for the XLE to get to higher price, I expect that it's going to have to do that. The reason being is this, folks, is that Exxon is 19% of the XLE. Chevron's 14.7%. So, you know, we're talking right off the bat 33.7%, just those two. Schlumberger, Pioneer, EOG, Occidental, Valero, they have 3 to 4%. You know, and so if we go take a look at SLB, let's go take a look at Schlumberger and see how that's setting up. So Schlumberger is at $74.46. Yeah, that's going to be able to give it a lot of help, because that November 3rd high is $84.43. So you can see these oils are important in the context of can it get the market to higher price. You know what I thought was pretty wild yesterday, and this is where you can see how in economies and in bureaucracies, it's the corporations that are basically always protected. And if you listen to what Yellen had to say, you know, picture how long that when oil prices were high, they said, well, oil prices came down, the economy would be great and go forward, okay? And that, folks, is a fact, okay? Because we know that, guess what? There's all millions of us. If we have to pay less for gas, less for heating oil, we're all going to do better, right? Okay, so watch how this shakes out. What she was talking about yesterday was that, if in fact oil stays low or gets lower, it's going to be a real problem for the economy. Now, the reason it's going to be a problem for the economy is not because oil is lower. The reason it's a problem, it goes back to what? It always goes back to debt, and it goes back to greed. And so what it is this, is that because oil was moving so fast and because we're opening out all the fields up, the oil companies, small and large, went over their heads with debt up to the yin-yang. So what that has done is this. Just like too much debt will always put you in and take the economy down, what it's done is that you have all these banks that have too much debt on their books. You have funds that have too much debt on their books. That is what will bring the economy down, not the aspect of oil being lower. Because if, in fact, the pumping just came, and they could sustain a level outside of $100, bottom line, folks, it'd be a different ball game. So, when I was going over that speech last night, it was intriguing. I said, oh, man, what a trip how this works, okay? And that's what you never hear inside, not just her, any of these highly bureaucratic speeches that come down to where the blame comes. Because if you remember, everyone said, oh, lower prices, it's going to be great. Well, guess what? It's lower prices inside the context of no debt versus the companies are loaded up in debt. So that means that the banks are loaded up in debt. That means the funds are loaded up in debt. And guess what? That means that all the, this is appropriate talking about it on window dressing, that whether it's the pension funds, whether it's the IRAs, they're loaded up on debt too. And that's what basically sinks this thing into lower prices. So now let's go over to the banks. Let's go take a look at the XLF, how the XLF is trading out here. XLF can't hold price. We got to $22.71 today. We're $22.50. And this, see, the banks still have a problem. The way the banks are laid out right now, they still have a problem. Try to get into its swing point here of $22.84. Not enough buyers out there. We did 28 million shares, and that's going into 38 million. Let's go take a look at JP Morgan Chase. And we have inside JP Morgan, JPM. Okay, so JP Morgan's not bad. Now this is a large weighting structure inside here. Up 74 cents today, 11 million shares. That looks like it is going to go after this swing point of $60.97. So JP Morgan just might be able to save the XLF rather. Let's go to Bank of America, BAC. Let's see how BAC is laid out. Yeah, BAC doesn't have any juice. No way. XLF. Let's just see. The last time I looked at this is that Berkshire Hathaway was a big weighting structure. There it is. See, Berkshire come out of nowhere. Berkshire is the #1 weighting structure right now. 9.4%. And Berkshire is trading up 62 cents. We're at 142.53. And that looks like it can go to 143. Nothing heavy. 143 looks like it's game, though. What Berkshire has been doing the last 3 weeks is that in the last 2 weeks, the volume has started to die in the vine. Berkshire is going against 22 million shares, and we did 22 million 2 weeks ago, but last week we only did 12 million. Well, actually, you'd have to 4 days, 4 threes are 12. That'd be 15 million because we're closed 1 day. So that'd be 15 million last week. You're still going against 22. And thus far, this week, you're at 356, 612. Well, you're going to do 15 million again. That's not the end of the world. WFC, Wells Fargo is the second largest weighting inside there, and Wells Fargo is not going anywhere. Yeah, Wells Fargo down off those highs of $55. You're at 48, and It's going to need quite a bit to get going to the top side. Some of the high volume stocks in this market right now, let's take a look at it. You got Freeport McMoran up 13 cents. Chesapeake Energy's down 2. You get Marathon Oil up 14. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow up 89, NASDAQ up 25, S&Ps are up by 9.5. And if we go take a look at what type of juice you got here, you're at 633 on the NYSE, so that means that's going to come in about 850. And it would need more than 840 to do that ABC structure. Actually, let me look at this for a second on the Dow. Yeah, it would need it's the 22nd. The 21st, actually. So let me look at this for a second. So the 21st, yeah, you're dealing with 840. We'll see if we can do it. Inside the composite's going to have the juice. It had it yesterday. It did 1.8 billion. It will do about 1.8 billion today because you'll get a couple $100 million coming into the close out here. Some of the higher volume stocks which is still a low volume market. We have out here, let's take a look, because what is going to happen, too, is that numbers are going to start coming out once again. Yahoo right now is up 16 cents. You get Cisco up 37. Wells Fargo is up 60. Facebook is down 136. some of the Dow stocks. We have Exxon's down 12. You have Disney up 79. GE's up 36. You have Big Blue down 82. Let's go to Big Blue. I haven't looked at Big Blue for a long time. So good old Big Blue. Let's see what this has done on this counter trend bounce. That's quite a counter trend bounce. Okay, so Big Blue, oh man, this is pretty cool. Big Blue has just gone from 116 to 150. This is lining up nice, man. This is pretty sick, actually. Okay, so 2 weeks ago we did 29 million shares, and you're coming into 42 million. Last week you did 17 million. And on a longer basis, you know, man, this has been in a down draft for so long. This is a counter trend bounce, that's it. So Big Blue's down from 215 bucks. It goes from 215 to 116. Now what it's doing is coming up to ICE. ICE is just a little bit higher, actually. So this is going to be cool watching this shake out. So we're at 148. If it ever can make up to 161 would be a beautiful short position there. Because what you have is this. Big Blue still has a high volume swing low, laying out the 111. You're coming up, and it looks like you're just doing a nice counter trend bounce going into the downdraft that had been created the month of October of 2014. That's when Big Blue went from 190 to 161. That's what's laying out here. And what has happened, which is pretty wild, is that this was the actual price projection when we were at the highs, meaning the high of the October 08 low was 116.80. That's where the last time with volume was, and we went to 116.91. That's pretty sick. This would be the ultimate. If you want to do a case study, folks, in the art of time in the trade, this would be the case study, man. This is pretty sick. Because what it is more than anything, and this is what always blows my mind, it's like markets like to go to the last time that it has volume. You know, we know they can go up forever on light volume. But when they crack, that's where they go. But it's hard to believe until you actually see it. Because when this turned at $215, when you look at a chart, you can say, well, the last time with volume is down at 116. Well, guess what? That's where it went. Now the real key is, now this is what's really cool. The key is that on this bounce here, is that it? Is that it? Now, right now, how we get into 161 would tell you whether that's it or not. And if we get in there with too light a volume, they'll test that low once again. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming back with some numbers after the close. Dow Industrials right now up 78. NASDAQ up 21. S&P's up 7.5. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom, how's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bid. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man. And there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Believe in the magic of tomorrow, and your spirits will be lifted on the wings of hope. Like that one. Market-wise, let's take a look at it out here. We had the Dow Industrials up 83. NASDAQ up 22. S&P's up 8. Gold contract down $10, traded at $1,227 an ounce. Silver off 2 cents, $15.21 an ounce. Platinum down $5.50 at $9.63 an ounce. Copper down 2 pennies at $2.18 a pound. Light sweet crude flat, $38.27. That's after the oil market went up and down about a buck. Bonds, the 10-year up 2 ticks, 130.02. 30-year down 30 ticks, 163.18. Both of them couldn't hold higher price. They had light volume. You know, we'll see how this baby shakes out tomorrow. King dollar down 326 ticks, 94.82. What King dollar did, folks, is this. It got into the B point of an ABC structure on the way down, broke it with volume, got a little bit higher than the B point at the close. Bottom line, you get a confirmed ABC structure on the way down, $92.30 price projection. $92.50 is the high volume swing low that's been laying out there since August 24th. That's what we're going after. And of course, if that's in the case that does go after that, you will see these commodities go topside once again. You're going to see the metals go topside. You're going to see oil go topside. And with that, I suspect the market is going to finish this ABC structure up that it's in right now. The euro up 44 ticks at $1.13, and the yen is down 25 at $1.12. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so right now in the cash S&P, the SPX, we're at 2,065. Now, the ABC structure is 2,087. That's the A to B equals C to D. What we don't have out here is an additional ABC. We have that in the NDX 100, but let me show you what we have here. So if we go over to the SPY, what you're going to have is this. The SPY today did 80 million shares. It would have had to do over 134 million in order to be an ABC structure on the way up. We're at 206. Bottom line is still the price projection from the first ABC that was started out here on the 24th of February gives you a 211 A to B equals C to D. Inside the marketplace, what we had out here today is that the NYSE did 823 million shares. The NASDAQ composite did 1.7 billion. Now, the NASDAQ composite also took out its B point of an ABC structure yesterday, took it out with volume. We're at 48.69, and that sets up a 49.62 number. Now, 49.62 in the NASDAQ composite, folks, brings you right into the gap where we gap down from January 4th. And I expect, guess what? I expect we are going to get up into that level. Gold contract. What do we have with gold? Gold traded in a price spread out here today from 12.46 to 12.24. We're at 12.27 right now. What gold has done is this. You pushed into a higher high than yesterday, and you have the volume. 171,000 contracts. Gold is building cause to get up into the higher end of this consolidation, which is 12.87. That's on the short term. Longer term, gold is on its way to 13.92 to the 14.24 level. The XAU, the HUI, they're in confirmed ABC structures on the way up. XAU is flat out here today after going up 7 points yesterday. We're at $70.32. And if we take a look at this, what you're going to see is we also had volume come in this and come in us really nice yesterday. Volume was 41 million shares as we went higher. And when we had gone lower, on the 23rd, you did 53 million. We went higher on the 16th, and we did 52 million. We go into the Gold Bugs Index, the HUI. What did the HUI do? HUI went up $10 yesterday. You gave back $1.50 today. And HUI also had the juice in the move. Yesterday we did 26 million shares. Both the XAU and the HUI, they're in ABC structures on the way up. We go take a look at the notes first. 10-year note was flat out here today, moving around quite a bit. You did 1 million contracts. It's going to need a lot more than that. It's going into 1.5 and 1.6 million contracts. Bottom line, I expect both the notes and the bonds to basically give it up. The bond, the 30-year bond did give it up today. 30-year bond gave back everything that it gained yesterday. The spread yesterday, we went from 163 to 164.24. We came right back underneath, actually, the lows of yesterday to 162.23. So bottom line is that even with Yellen saying, hey, guess what, we're not going up rates for a while, I suspect they're going to crawl up a bit. Because the 10-year is still at 1.8. You need a mortgage, folks, go get it. Go get it right now, because that is a dynamite rate. Those mortgages are based off the 10 years. Now, King Dollar. What do we have with King Dollar? King Dollar gets into its B point, has the volume, breaks the B point. We did 26,000 contracts, got down to a price point of 94.56. Your last swing low out here was 94.60. We had 20,000 contracts there. It's a fairly large ABC structure on the way down. It's a $4 ABC structure on the way down. That's going to lay that A to B equals C to D out at that $92.40 mark. And as I said a little bit earlier, it's the $92.50 mark that is left over from August 24th downdraft. What's going to be so wild about watching how this shakes out is that if, in fact, if we ever broke that swing low, we've been at that same place now for about a year and a half. If we break that swing low, we'll be down to the $89 level in about a heartbeat. If you break that $89 level, then you're going to have the dollar's going to have real problems. You're talking about 84. But there's not much in between the $92.50 and 88.80. So the real key is that, as we get down into that level, is they're just going to blow it apart and say, see ya, don't want to be ya. You stay right there, folks. We come right back. Dow Industrials up 83, NASDAQ up 22, S&P's up 8. We're going to be right back with our man, Mr. Basil Chapman.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 83, Nasdaq up 22, S&P's up 750. And, coming up tonight, folks, our man, Mr. Basil Chapman, is going to be doing a great workshop, 6 o'clock to 7:30. So if you're in your car right now, driving home, okay, bottom line, you can come to this workshop. The way you do it, you come to our website at TFNN. You can test drive his newsletter for 1 month, absolutely free. You do that because this is a workshop for subscribers that gets you a great newsletter for a month, plus you come into the workshop tonight from 6 to 7:30. And if you can't make it tonight, folks, what you can do is that we have some great technology. It'll be on your page for full 30 days. And I'm going to bring our man, Mr. Basil Chapman, in here to talk about what the workshop's going to be about tonight. What's going on, Basil?
Hi, Tom. How are you?
Doing great, man. Yourself?
Very good. Thank you.
Hey, first off, what's the weather like in Boston?
It's really nice.
That's a beautiful
thing. It's
thing.
starting to get very nice, yes.
Well, I just want you to know, I want everyone to know, we got a big family reunion in South Boston this weekend, Basil.
Oh, really?
And
Good.
they have my bear suit hanging at Castle Island. And I'm going to pick it up.
Are you going to swim to get it? Or you going
No, I don't have to swim to get it. No, I don't have to swim to get it. It's out in Castle Island. It's out in Sullivan's. I'm gonna pick up my bear suit and bring it back to Clearwater.
That's good. Yeah. In fact, I'm looking at the chart and we'll discuss exactly the point that you're making right now. The chart that I'm showing right now, which I discussed exactly a year ago, was that this is the Dow chart based on with the Chapman wave notation.
Okay.
And we were just somewhere around here in March of last year. And what I'd said is I believe that we should be making in Elliott wave theory, the 5 waves, 1, 2, 3, 4, 5, and 5 is the one that you've got to be very careful because usually that's the culmination of it. So I'm trying to put that together with the Chapman wave. The Chapman wave concluded a move to the 18,350 top. And then what happened in May is that we turned down and the market fell to 15,370, 3,000 points.
Yes.
Then it ran up and it made an H pattern, came back and it tested. The S&P didn't do this, but the Dow did it. And the Dow tested successfully January the 20th. It went to a little higher low at 15,450 and then 15,450. What's really important about this chart is that it needs to make, in Elliott wave terms, it needs to go to a 5. And it can only do that when it really breaks above this 18,351. Well, it coincides with my work that if there is any break, it doesn't even have to be a close, but a break above 18,351, I really prefer to see 18,400, really starts both for me Elliott wave 5, and it starts a new wave count, a buy signal in the monthly chart of the Dow. I mean, it's impossible to believe after all this. You know what I'm saying?
Yeah,
so
that's awesome. Yeah.
This makes the pattern so important. You can see this little dashed line, which I'm going to talk about, is the resistance, and we stopped right there today. And this dashed line going up says that there's a projection, a left side, right side projection that says if there is a break to the top side, we could go to that could be occurring in May.
Well, let me ask you something.
Yes.
if we broke the top side, right, and then within the month though you had a major failure, that wouldn't give you a new count, right? Or would
I'm going to that gives a new count.
Okay.
But I can't make an alternate count because I've got a G.
I'm with you. Okay.
Yeah.
Okay.
So and here's the other thing that I'm going to talk about. In fact, that's a wonderful question because I bring it up in the chart formations, and this is in the Chapman wave methodology, what I call a double top or what you call a drop bucket. You go to the top, and you either get just about to the line or just over, but you don't close sharply above it. That says that if you, and I even discussed this tonight, that if you pull back 1/3, there's a good chance that you're going to go all the way to the bottom. That is to the bottom of the cup.
Yeah.
Back to the 15,000.
Well, you know what's intriguing, Basil, and folks, is that the last two highs. So picture this, and depending where this S&P goes, the cash S&P, the high is May of 2134. And then November we reached 2116. So if the most deviant thing the market could do is just come right underneath that a bit and then say, see ya, don't want to be ya.
So that would imply both that the head wave 4 is still consolidating, and the Chapman wave is still consolidating. Here's the thing that's going to be so interesting. I'm showing you the monthly chart. I showed it the other day, but now it's even more exciting. Look how well this green candle we haven't closed. We have to wait for tomorrow to close. That is strong, but the technicals are not yet strong enough. I'm going to be discussing the Dow pattern, the S&P, and the other indices, because we'll have almost a monthly close with 1 day to go. That's number one. Number two is I'm going to be discussing the sectors, the semiconductors. The XLK has been fantastic. The XLK, that is the high tech, and that has it has, let me just see here, it's got Apple, Microsoft, Facebook, AT&T. We actually long AT&T, a terrific gain. Google, Verizon. And look, this is just today, I think it's gone to 44.65, 44.67. By 2 cents, it just made a new high. So I'm going to be discussing it in relation to all these things. There's something that I'm going to be discussing, which I haven't seen anyone discuss yet. It's inflation. And it's what for my subscribers we are attempting to do about trading inflation. We're going to be discussing bond yields, commodities. I'm talking about sectors that have made an H pattern going all the way back in this arch formation, a huge arch formation like some of the commodities.
Yes.
And they've had a fabulous first quarter. What does that mean? What's the implication? What looks good? I'm going to be talking politics, not who to vote for, but the politics of politics. There's going to be quite a conflagration coming up this summer. So this is part of the market. This is very important. I'm going to be discussing, hey, have a look at this. This is very interesting. If I can just find it right here. Right here. This is Boston. You haven't seen this. This was in the paper today, in the Boston Globe. This is above the South Station, above the Back Bay Station.
Right.
Brand new building. That's being put up. And Boston was a big college town. Now it's becoming a major city. There's a big implication with these. And here's something else that I'm going to be discussing. If I go to slide 47 right here, slide 47. Latest RV stats are very encouraging. Recovery, boomers send RV sales roaring back, and motorhomes in particular. And all of this has a lot of implications. So if ever there was a full webinar that I've given, this just covers an incredible amount.
That's pretty cool, man. You got to love it. And so, folks, the way you do it, okay, if you're in the car, you get till 6 o'clock tonight, okay? You come over to our website at TFNN. You'll just sign up for the newsletter for a month. You test drive it, absolutely free, 30 days. You do that, you get in the webinar at 6 to 7:30 tonight. And as I said a little bit earlier, if you can't make it, you can still sign up. And then it's archived on your page for a full month. You can go over it as many times as you want. I can't wait to hear this one. And you know what's so cool, Basil, is that of course, I get a lot of friends in Boston, but I got a lot of union friends in Boston too. And they sent me over that building earlier today, man.
You did see it?
I did. Yeah. I did, because I get a lot of friends that are in the iron workers and the carpenters unions and all this. Okay, so the bottom line is that
Tom, looking out, it is really exciting, because for certain buildings create the character of a city.
Yeah.
So this is very important for Boston. There can't be many mistakes here, because those mistakes go on forever. So this has to be really very good.
When I saw that building, I can't even think what it's cost to put up. So I know your point, because it's amazing. There's no doubt. Yes. Hey, listen, folks. I remember when they built the Boston Harbor Hotel, guess what? Then everything cracked. Everything went in half.
Yeah, that's right.
Amazing.
That's right.
Thanks, Basil. We look forward to the webinar tonight.
Thank you, Tom.
You stay right there, folks. We'll come right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe Commodity Solutions CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And if we go over to Chipotle, folks, okay, this is going to be pretty wild. You know what's pretty wild is as the number of burger joints that are opening across the country are pretty amazing. So Chipotle is going to be a new one. They just registered the name Better Burger. So Chipotle may be getting into the burger business. Chipotle had already invested in 2 smaller chains. They're considering another restaurant concept focused on burgers, said Chris Arnold, spokesman for the Denver-based company. The company filed a trademark application this month for the name Better Burger, according to U.S. Patent and Trademark officials. It's a growth idea. It's a growth seed idea we are exploring, Arnold said in an email. We have 2 non-Chipotle growth seeds now open, Shop House and Pizzeria Locale. And I've noted before that Chipotle model could be applied to a wide variety of foods. There's no doubt that when you do go into these newer restaurants, it looks like everything is right in front of you, you know, and you get in line, you get your food, and, you know, you basically go sit down. You know, that being said, I was in a restaurant the other night, and it was pretty cool. You didn't see any of the, you know, when this first started, and you're going back 30 years, when it first started that I like watching the cooking at certain points. But what I didn't realize until the other night when I went in this restaurant, that you see 0 cooking, 0 help, 0 everything. It was a lot cooler in that restaurant. It was just like you're sitting at home. So it was pretty cool. Okay, so anyway, Even as it mulls expansion, the burrito seller is trying to recover from the food safety crisis. Of course, a burger chain would give Chipotle a way to expand under a fresh banner. It would also continue efforts to apply the fast casual model, fresh ingredients, customized menu items, and other cuisines. Chipotle opened its first Shop House Southeast Asian kitchen in Washington in 2012. The noodle selling chain has expanded to Los Angeles and Chicago. Chipotle also invested in Pizzeria Locale, a fast casual restaurant that started in Colorado. Burgers would be potentially profitable because beef prices had gone down. I tell you, man, I wouldn't. I love burgers, but I'm not buying no burger off any fast food chain. It just won't happen. But guess what? That's not what's happening across the United States, because there's plenty of folks that are buying them hand over fist. No doubt about that. Let's go over to the silver market. We take a look at silver. Silver is still the laggard inside the metals complex. Silver got to a price point today of $15.46. Couldn't hold price. You did 43,000 contracts. Now, the contract value was good on it. And bottom line, though, we need to see another expansion, wide price spread, accelerated volume inside the silver market. Now, that being said, the silver equities are still performing. If you look at Great Panther, this is a stock that was trading at 41 cents January 14th. You're at 96 and what that did today, that's pushing into its highs with volume. You did 1.4 million shares. The high out there is 1.1 million shares. That's building cause to make the next leg up in the marketplace. So that's a silver stock. If we go look at Pan American Silver, PAAS, same thing. It's at its highs. It's gone from $5 to $11. Hanging at its highs, that's saying it wants higher price. You go to Hecla Mining, Hecla Mining also is at its highs. Hecla went from $1.40 to $2.80. That's pushing highs, and it's pushing with volume too. So what's intriguing there is that the let's go to First Majestic, AG. AG's at its highs too. First Majestic, that went from $2.67 up to $6.75. So you talk about a nice expansion. What's happening there too is that also is pushing its highs with highs. Okay, so what you do have there, and that also is a silver producer, First Majestic. That's always been a really strong stock too. I interviewed that CEO. Well, when that thing moves, it moves. They take in $250 million a year. So what you do have inside that silver market is that the equities absolutely are performing. What we'd like to see is that we'd like to see the silver physical market catch up with the gold market, because what you do have, gold is way ahead of silver, and we'll see if in fact that has to happen. But I do expect that if gold is going to go where I think it's going to go, that silver should be probably at the $18 level. What is happening is that silver is trying to get over the $16 level. What I expect we're actually going to see, because when silver moves, it's so volatile, folks. If I put this up on I'll put this up on a continuous contract. I expect that when silver gets up and over the $16 level, it's not going to stop at 17. It's going to go right for the $18.50 swing high that was established in January of 2015. That's the way it looks to me. And, it makes sense in the context of it's having such a hard time, because if you're watching Target TV, I'll put this here. This is a monster supply line that you're coming into. The supply line that we're coming into in silver started in June of 2013 and went all the way over to September of 2014. So you're talking about what? That's 3, 6, 9, 12, 15 months. That's the supply line you're coming into. So everyone, and what supply line specifically means is this. Silver got croaked. There's plenty of people that bought it, thought is going to be a bottom at $18. That consolidation there was $18 to $22 and to $24 actually. So there's plenty of people that are in 18 to 24. Each and every time that's coming up to that line, people are selling into it. And they probably just want to get their money back or lose a little money. Because what does happen over the course of years, you got to remember something, is that at the very beginning of a downdraft, people will hold on and say, I'm not going to lose money. After 2 or 3 or 4 years, folks, what ends up happening is that type of mental behavior changes. And what I've seen over the course of these years, the mental behavior then becomes that, okay, I'm in it for 20, I'll take 18. I'm in it for 21, I'll take 17. That's a normal behavior, by the way, okay? You know, because you've made other monies over the course of years. So that's what you have happening, you know, in that silver market. And that's why I suspect that, hey, well, it has so much resistance at that particular level. Now, what's going to be intriguing is that the next quarter, the quarter that's just ending right now, these silver companies, when they're coming out with their numbers, will see, in fact, what they made. Because what the gold and silver companies have done is that, picture you have your backyard. If you have your backyard, there's certain parts of your backyard that you can dig less ore out, so ore is just rock, and the rock is worth more money. As prices are low like this, that's what these companies are doing. So it's real possible, and you can't switch this up. You can switch it up in a few months, but you don't switch it up like overnight. So because prices were so low in December, they had been digging those valuable places, and because we went up so dramatically from December to now, you'll see some bigger numbers come out. So it's going to be intriguing seeing what those numbers are. You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go overseas first. We take a look at how Asia traded last night. What we had last night in Asia is this. You had Shanghai and China up 2.7%. The Nikkei in Japan was down 1.5%. And we had the Hang Seng in Hong Kong up 2.1%. So let's take a look at Hong Kong first. Hong Kong is trading at 20,803. And I suspect we probably got volume in this. Oh, yeah, it's the ABC up. This is a trip, man. Okay, so check this out. So Hong Kong was up $437 last night. You did volume of 2.1 billion. You took out a B point of 1.5. So let's see. Most conservative way to do this. A point is 19,800. I'm just going to ballpark this quickly because 19,800. Your B point is 20,000. Oh, this is a monster. 772. 27. That's a 972 A to B, and 20,250 is your C, which is going to give you. Okay, so we're 20,803. That's an ABC structure to 21,222. This is pretty cool because the low of December 14th is 21,010. And bottom line is that Shanghai wants to go higher, though. I mean, the Hang Seng in Hong Kong wants to go higher. Now let's go to the Shanghai. We take a look at the Shanghai. And isn't it wild, folks? See, when these ABC structures happen, ABC's up, ABC's down, they go all over the world. That's just we're a one-world market here. So Shanghai last night, I was up $80, which is a lot, because they're only talking a 3,000 number. You did have an expansion of volume, so we'll see how Shanghai is going to attack the 3,028. Right now you're at 3,000. You're going to need some big volume in Shanghai to blow that out because it's 35 billion shares up at that level. We go over to the UK. Now, what has happened is this, is that the FTSE 100 has been trying to break out of this area going all the way back to March 1st. Had juice out here today. There's no doubt. I won't get the volume to 8 o'clock tonight. We're up 97 points. You're at 6,200, and that's right where it has not been able to get up and over. Now, I expect we're going to get up and over that. We'll see how many more tries it's going to make. And that's going to be a big number, and it's going to be a big number as to what the volume number is when I get that tonight. Because if that was pushing with volume, your probability goes much higher that that's going to take it out, meaning take out the ABC structure that it's been consolidating in. We'll go over to the DAX in Germany. What we have in the DAX in Germany is this. The DAX, 10,046. And, the DAX is, bottom line, on its way up to where the NASDAQ is. So the DAX loves trading kind of like the NASDAQ, and the NASDAQ likes trading like the DAX, vice versa. So the DAX is at 10,046. The NASDAQ wants to go fill its gap left over from December 30th, and so does the DAX. Now that move there, that'd be a decent move. You're up 158 today. That move would bring it to 857. So you're talking about 800 points, which, is not a huge amount when you can go up 158 today. Percentage-wise, this is what we had in all the markets. You had the Dow up 0.4%. NASDAQ was up 0.4%. S&P was. Overseas, we had the FTSE up 1.5%. The CAC in Paris was up 1.7%. The DAX was up 1.6%. And last night in Asia, they were up good. They had the Shanghai up 2.7%. Now the Hang Seng was up 2%. Let's go to the Nikkei. So the Nikkei was down. That was down 1.5%. That's still in a consolidation. So the Nikkei down 222. We did 1.3 billion. I said Nikkei's down on light volume. So the Nikkei also wants to go higher. That's how that baby is set up right now. So I suspect what we're still going to see is that you're going to see this S&P finish up its ABC structure on the way up. You have the NDX 100 now also in an ABC structure on the way up. The difference is that the S&P has a much higher price, not its highs, mind you, okay, but it has a much higher price. And in fact, watch this. This is pretty cool, folks, because this is how the deviance can take place here. If we take the S&P, the cash S&P, we're at 2063. Let me get these exact numbers in front of me. Okay, so one of the most deviant things it can do is get right next to the highs, because see, thus far, we are in a definition of a downtrend. And you can say, okay, how are you defining a downtrend when we're at highs? Well, what you have is this, is that the high of the S&P was generated in May of 2015. That high was 2134. What do? We went from 2134 and we established a low at 1867 in August. Then what do? You climbed all the way back topside again. The next high that was established was 2116. That was established in November. Okay, so now we have one lower high. We actually have two. I didn't, because there was a second high that was established on the 24th, the week of the 24th of July. That was 2132. So your first one was 2134. Your second one was 2132. First was May, second was July. Then you do the downdraft. Third one, which is an important one, was 2116. And then what do? You go all the way down to 1812. So you have three lower highs. We have two lower lows. That's a downdraft. That's a downtrend. Now, so here's the deviance. 2116 is your last important swing high. This projection is 2087. So you can imagine if, in fact, you do that, and that's all you make, it's like, oh, that's going to be a trip watching that shake out. Why? Because then you can have four lower highs and just barely, and and then we'll see how it handles it on the way down. But most of the time, markets that do want to go south, or let's say markets that want to go north, markets that want to go south will do that at the highs. And they get very, very close to making another high, and then they can't do it. That's one way that highs come in, that you get big downdrafts. Another way that highs do come in is that you'll get up to that high, and then like last hour I said, okay, if you get a spike of a high. What happens there is that you get up to a high, you spike the high by a good 20 points on the S&P intraday, and then you give it up, and then the market just gets ripped out beyond belief. So there's two scenarios at the highs. And of course, the third scenario would be that you break the high and just keep going. It never looks back. On the lows, the same thing happens when markets want to take off. What happens is that they get to a low, then they get to a higher low, and then they get to a higher low and they almost get it, but guess what? Then they go topside. And of course, both ways, what do you want to be measuring? You're going to be measuring the volume characteristic with the price characteristic. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. And don't forget, folks, if you'd like to come to that great webinar Basil is going to be putting on tonight, you come over to our website at TFNN. You'll see it right on the front page. And on the front page of TFNN, you're going to see the coming 3-month outlook for market and which sectors could rally and fail. It's a great time for this webinar, of course, because you are coming into the highs of the marketplace. As you come over there, you can test drive his newsletter for 1 month absolutely free. You get into the workshop tonight. The workshop is from 6 o'clock to 7:30. Basil does some great workshops. He puts together the technicals, puts together the politics, as he said, not the politics as who you're voting for, the politics meaning what cities are getting built, what kind of greed is basically out here. That's what it really is about. So it's pretty wild watching this whole thing shake out. And as I was saying, when Basil was bringing up that building, you know, when you go back in the history of any great cities, you have the development take place. Each and every wave of development always goes bust. That's how communities get built. And I remember specifically in Boston in particular, because that's where I grew up and that's where I did a lot of business. You know, when you take a look at the Japanese were coming in. They were going to own the whole world. And then, bottom line, there was a bust, and all the land got taken back. Then the Middle East came in. They were going to own all the land. It goes bust again, and that gets taken back. And when that happened, this is really intriguing, because when that happened, we were just talking about that new building. When that happened, all of the Faneuil Hall section of Boston was getting built. And I remember the Boston Harbor Hotel, gorgeous hotel. You know, my office is right across the street from it. And when that got finished, those units in there, you know, were beautiful. Well, guess what? You could buy any one of those units you wanted at half price. Okay? Bust. Boom. See you later. Then what ends up happening? Guess what? Starts up again. You know, so that's what Basil, I suspect, is going to, maybe not talking about that, but that's how the world gets built. That's how great cities get built. That's what it really comes down to. It's always the question of when are you coming in, and bottom line is that what part of the cycle are you in, and are you going to get out of the cycle on time? And if you are in the real estate market, folks, it's actually easier, and it's a numbers game. Because as soon as the rents do not pay for the building, guess what? That's the beginning of the bubble. That's just how it goes. Because then what you're doing is that you are depending on that someone else is going to buy that, not for cash flow. They're going to buy that they feel it's going to go up, and that's the only way they're going to make any money. And that, folks, is insanity, okay? Because that is the way that you go down the tubes. There's no two ways about it. So to make it quick, down and dirty, kind of go like this. So rent's $1,000. Guess what? You're taking $12,000 in, take the taxes away from it. Let's say it's $11,000. Guess what? Multiply it by 10. It's worth 110 grand. End of story. That's what it is. That's a cash flow. You know, you get the cap on that. I'm doing this quickly, but the cap on that somewhere about 7 or 8%. That's what it is, and that's without taking. You know, you haven't even basically. That's a quick down and dirty way of doing it because you still have maintenance issues and you get all the rest of it. Okay. But when you get above that, that's when the bubbles start. And most of the time, what I've seen is this: when you get above that, it'll stay above it like 2.5, 3 years. You know, that's just how it goes because that will go up. What you want to do is you want to know, depending where you are, is there only one section of the city that's above that? Is there more sections? And once the whole city gets above that, see you, man, just get out of the way because that is going to get chopped right down. Ba-boom. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking. I'm right back here tomorrow morning. Remember, we start programming 8 o'clock in the morning. Right on your cell phone, TFNN.com. Go get them, folks.